Hey there, and welcome to this explainer. Grab a cup of coffee, pull up a chair, and let's just chat for a bit. Think of me as a mentor or, just an old friend sharing the absolute secret to getting an honest profit number. If you're a small business owner, understanding this, it's absolutely essential for your long-term growth. Because here's the thing, your books are only going to tell you the truth if your income and your expenses land in the exact right month. Otherwise, you are literally flying blind.
Okay, let's dive right into this. Good bookkeeping isn't about when the money moves, it's about when the work actually happens. I want you to make this your repeating mantra. Seriously, write it down, put it on a sticky note on your monitor. This one single sentence is the core secret to making sure your books aren't lying to you.
Section 1, timing is everything.
Look, here is a pretty scary truth. Countless small businesses go under simply because their profit numbers are a total mirage. Let's compare the two ways you can keep score to fix this. We've got the cash basis on one side and the accrual basis on the other. Now, it sounds incredibly simple to just track the cash, right? The cash basis is what almost all beginners do. You just write down a transaction when money literally moves in or out of your bank account. But here is the massive pain point. If your income and expenses land in the wrong month, your profit looks completely fake. Say you pay a massive insurance bill in January. Suddenly, January looks like a terrible, unprofitable month, even if your sales were fantastic. It creates this dangerous mirage where you're either artificially rich and spending too much or totally panicking. The accrual basis, on the other hand, that's the professional way. It means matching your efforts to your accomplishments. You record things when the work actually happens, period.
Section 2, the two house rules.
Now, what's really interesting about this is that to make the switch to this honest way of bookkeeping, you really only need to make two fundamental mindset shifts. Think of these as our two house rules. Every business owner needs to make these second nature. House rule number 1 is the revenue recognition principle. Let me translate that into plain English for you. Count your income when you've actually earned it, even if you haven't been paid a dime yet. If you run a service business, say you finish a massive landscaping job, or you clean a client's clothes on the very last day of the month, you earned that revenue the exact moment the work was performed. It absolutely counts toward this month. It doesn't matter if the actual cash doesn't hit the register until next Tuesday.
And house rule number 2 is the matching principle. Simply put, let the expenses follow the revenues. Basically, this means you absolutely must put your expenses into the exact same month as the income they helped create. If you spent money on labor or supplies to finish a big project this month, well, those expenses belong in this month's books. It's all about matching the effort to the accomplishment.
Section 3, the 4 cleanup moves. So now that we've got our mindset right, how do we actually fix our timing in the real world? Let's move to the practical, actionable tools we use at the end of every single month to clean things up. The formal accounting term for this is adjusting the accounts, or making adjusting entries. Now please, don't let that intimidating jargon scare you off. Adjusting the accounts is literally just a routine cleanup step. It's a quick sweep of your books at month end to make sure everything is sitting in the right month. And this brilliantly illustrates the 4 real-life business scenarios where your timing needs to be fixed at month end. We've got prepaid expenses, unearned revenue, and accrued expenses. I'm going to walk you through exactly how each of these works using concrete, everyday examples that you probably deal with all the time. All right, cleanup move number 1, prepaid expenses. Step 1 is to identify a cost you paid ahead of time. Step 2 is to spread that cost out as you use it. Let's use business insurance as an example. Nobody likes writing a massive $600 check up front for a whole year of coverage, right? Under that flawed cash system we talked about, your current month takes a huge, unfair loss from that big check. But with our cleanup move, we only expense 1 month at a time. That's $50 this month and $50 next month. You're matching the expense to the time period it actually benefits. Cleanup move number 2 is unearned revenue. Step 1, you receive a customer deposit. Step 2, do not call it income until the work is actually done. I really want to warn you here. If a customer gives you a huge upfront deposit for a job you haven't even started yet, do not treat that as true income. If you do, your current month is going to look artificially amazing, and you might end up spending money you haven't truly earned. It's unearned revenue. Hold off on calling it income until you actually perform the requested service. Cleanup move number 3 is accrued revenue. This is basically an accrual for money you've earned but just haven't been paid for yet. Step 1, perform the work. Step 2, count it as revenue right now, even before you send the bill. Translating this to everyday life, if you put in the sweat and did the actual work this month, it counts toward this month's honest profit. Don't let your profit look artificially low just because you're waiting to mail the invoice to the client next week. And finally, cleanup move number 4, accrued expenses. Step 1, identify what you owe. Step 2, count it as an expense right now, even if payday isn't until next month. Let's clarify this with employee wages. Say you owe your team for the last few days of the current month, but their actual payday isn't until the first week of next month. You must count that wage expense right now. Why? Because their labor helped you generate this month's revenue. You have to include that expense to see your true profit.
Section 4. The honest profit payoff.
So, the crucial point is, mastering these 4 simple month-end cleanup moves isn't just about making your accountant happy. Trustworthy numbers mean you can safely expand your business. It provides the absolute empowering bedrock for long-term growth. When you actually have an accurate, honest monthly profit, you can finally make confident decisions. You stop guessing. You actually know for sure if you have the margin to safely hire a new employee, expand your operations, or, sign a lease for a bigger space. Let's bring this narrative loop right back to a satisfying close by repeating our core mantra. Good bookkeeping isn't about when the money moves, it's about when the work actually happens. Just look at how far your understanding of your own business has come. You now know for a fact that tying your numbers to the actual work is literally the only way to get the truth.
Before you learn to adjust your accounts, your business finances feel like one giant question mark. It's just the great unknown. You might have cash sitting in the bank, but you have no real idea if you're actually turning a profit. It is a terrifying way to run a business. But by taking control of your timing, you erase that question mark forever.
So I'm going to leave you with this final provocative question to chew on. Are your books actually telling you the truth? I highly encourage you, right after this explainer, go check your own bookkeeping. Apply the honest month framework we just talked about, clean up your timing, find your true profit, and empower your business to grow safely. Thanks so much for learning with me today.